Welcome back. As promised, let's get to the management of CCL products. Challa Srishant, who's the managing director, joins in now. Remember, the company had reported a strong performance in the second quarter. A large part of that was also led by increased prices, increased capacity and volume growth for the company coming in from their new plant in Vietnam. We do have the management with us, a 50% revenue growth, a 36% profit growth. Challa, the question is the near-term outlook on coffee prices. Yes, it does not affect your margins. Yes, it does not affect your volumes. But what it basically does is, could have an incremental impact on, say, client behavior or your own branded sales, etc. So what's your near-term outlook on that? After this massive rally that we saw in coffee prices, there were some signs of stability and reduction from the highs as well. From where you are, what do you look at when you're expecting coffee prices? How do you expect them to move over the next couple of quarters?
So right now, coffee prices are also at a high because of because of the tariff uncertainty that is there in the US and a little bit about the climatic change and all that. But if you look at the long-term picture, Brazil is actually increasing its production of coffee quite a bit. Vietnam throughput is also expected to be quite good. So all these factors, we're expecting a correction to come in the next couple of months. And that's also one of the reasons why we are advising our customers to take more short-term contracts in the intermediate time and focus on more long-term a little later on.
All right. Hi, Challa. Good morning. Good to see you and Nigel on this side. A quick question on the near term. Mangalam will get back to the demand dynamics. But in the first half of the year, you have grown by 35%. But as it's stated, you're talking about growing the EBITDA by around 15 to 20%. So would you like to upsize that, in terms of a realistic EBITDA guidance for the year? Point number one. And the EBITDA per kg as well is at around 135 rupees. 130, 135 rupees. Historically, you have done around 110 rupees. Is this a new normal?
So right now with this, the guidance, yes, we're looking at more closer to around 20%, plus or minus a few percentage points. Now, last year, if you look at it, we had a plant shutdown in quarter2. That is why the growth appears to be significantly higher. There will be another plant shutdown that we are planning the next, as in Q3 and Q4 combined. So we are sticking to our guidance of about 20% EBITDA growth.
20%.
Got that.
Yeah.
And
the EBITDA per kg, yeah, it is. There is an improvement in EBITDA per kg because of the product mix with the freeze-dried unit coming online. So and more of small packs. So all these factors are helping us slowly inch the EBITDA per kg forward.
All right. So, on that itself, if you could give us a couple of bookkeeping answers. Of your total capacity of roughly 77,000, how much of that is freeze-dried? How much of that is spray-dried? How much of that is in India? How much of that is in Vietnam? And what's the difference between EBITDA per kg when it comes to freeze-dried and spray-dried?
So you're asking for too much details.
That's our job.
But I can give more on a blended basis. So now Vietnam and India both have spray and freeze. We wanted to have that flexibility for our customers, especially when things like tariffs and other issues come up. We should have the flexibility to shift origins. We have about a 6,000-ton freeze-dried capacity in Vietnam, and we have another about 11,000-ton capacity in India. And the rest is all spray-dried capacity, about 30,000 tons in Vietnam and the balance in India.
Got that. And what's the differential in EBITDA per kg between FD and SD?
So it'll vary actually. It's not only SD and FD. It's a little bit more complicated because of the small packs that are there as well. So it gives you a little bit of a skewed nature. But in general, about 15% more is what you can expect from FD compared to SD. That's also one of the reasons why the capital investment is significantly higher for FD compared to SD.
Got it. All right. Give us a few more numbers then. Branded business, I think in the first half of the year has done around 200 crores. Yes. That's of the total 300 crores of domestic business. For this year, what do you end up with? And for FY27, what are you looking like?
So we're looking at around 230 to 250 crores is the range that we're looking at for the branded business, and overall domestic business about 650 is what we are targeting for this year.
650 or domestic, and out of that, how much will be branded?
So branded will be about 430 to 450 is what we're looking at.
All right, 430 to 450.
And for the next year, because this is the one that, the street is
Yes.
very excited about. So the next year, what will it look like? What is the aspiration?
We are aspiring for 1,000 crore brand 1,000 crore domestic business by next year. So it's a steep jump, but yeah, let's see how things pan out.
And what does your market share right now stand at in the areas where you serve already?
So
because overall versus where you serve are two different matrices.
Correct. So that's actually a very good point. Overall, in India, we are today the number 3 brand, but in the regions where we are actually present in, we've actually taken the number 2 position. So especially in the south. So that is a positive for us.
Okay.
All right.
And what about the debt number, 1,200 crores? What do you end this year at?
So we're looking at around net debt about 1,300 is what we were looking at. It was 2,000. So from that 2,000, we are looking at 1,200 to 1,300 of net debt for this year.
So it'll stabilize at these levels then. Thanks a lot, Challa. Good to chat up with you. Always good to have a coffee in the morning. And we appreciate you joining in to give us a sense in terms of business. Well, on that note, though, we'll wrap up on this edition of Chartbusters. Stay with us. The market's a little under pressure, but trading our team, they're going to be joining in soon.